Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we had the consumer price index, the inflation report come out yesterday. Came out basically in line. So nothing major there in terms of better than expectations or worse than expectations. Just a very boring number. Initially the markets, how they took it, the stock market, they went up on that number. And later when the markets opened, so this was before the market opened, the number came out. Bonds and stocks moved up, but then right after we saw at the market open a reversal in the equity markets and even in the bond market. So really the numbers were a nothing burger. It was just shrugged off. When we look at the BLS website, it mentions here about the CPI report saying that the index for shelter rose 0.4% in October, accounting for over half the monthly all items increase. The food index also increased over the month, rising to 0.2%, as food at home index increased 0.1%. Food away from home rose 0.2%. Energy index was unchanged over the month after declining 1.9% in September. So again, the shelter and the food component continues to be sticky, continues to be elevated. The other components like energy continue to be, lower. But again, overall, this particular report, this monthly report, was basically in line. So nothing major there, right? We also had previously the Fed come out and cut interest rates as well. That event was also, shrugged off. It wasn't that big. It was expected. There's nothing new about it. And we have the next FOMC meeting coming up December, and the expectation is another rate cut. So what you're seeing here, the phenomenon that's going on, is that you're getting, as the equity market continues to move up higher, as you have S&P 500 break above now, all-time highs of 6,000, right? You have NASDAQ approaching also all-time highs. You got Dow Jones, Russell 2000 moving higher and higher. You got the Fed cutting, right? You got Fed cut. You got the Fed cut. You got also a new president coming in as well. You got a not only U.S. central bank that's easing, but you've got global central banks around the world easing there, cutting interest rates, and you got inflation reports coming either in line or lower, right? Although still certain components like the shelter component and so on tends to be sticky. Now what's very interesting in all of this is as the equity markets melt up higher, we're seeing the bond market sell off, especially more on the long end, right? Those yields move up higher. And some people say this looks and sounds similar to 2001, right? 2001, when Bush came in and won the presidency. And the bond market, especially on the long end, was selling off, and those yields were going up higher. And the stock market and everything seemed to be fine and everything, doing well. But before things started to turn around, you had the bond market sell off like we're seeing today, which might make you think, that's very weird, especially when you have the U.S. central bank easing here, right? So some people speculate that, when you have Trump come into office, it could be very similar to like Bush, or very similar to the 2001 template, where you get this bond market first selling off initially and then eventually turning around to moving up higher, and then the stock market finally topping and reversing. Now, we don't know if the markets will play out exactly like history. Of course, nothing will be exact and play out exactly the same like before, but obviously there are some, resemblances and some few things that could rhyme when you look at today versus previous recessions. Now, the equity market can also continue to melt up higher. We can see the S&P 500 come back lower, retest the 6,000 level, then shoot up higher. The bond market continue to sell off, right? The yield curve starting to, basically steepen, and it's doing that because of the long end sell-off that we're seeing there. So you could, it could prolong a little bit longer. That is possible. Anything's very possible. And if you look at the month of November, this month, and December, it wouldn't be surprising to see that, because we have no real change in terms of when it comes to the government, in terms of fiscal policy and so on. We have yet to see that, right? We hear about what Trump's going to do, but we have to wait till, I guess, office next year in January to see what he's going to do, what's his plans are, and does things get a little bit radical when it comes to maybe tariffs, when it comes to, trade wars, when it comes to potentially recessions. Could it be that the trade wars, tariffs could kick off something worse off in the equity markets or the economy, right? This so long prolonged recession that everyone was expecting, it's still not here, right? Could that finally kick in during Trump's term? I think definitely we could see that during Trump's term. The only question is where, when, how does it happen, and from what, right? But until then, right, nothing's truly broken so far. When you look at the equity markets, you look at the bond markets, and when you look at other markets like even Bitcoin and crypto, that continue to melt up higher and higher and higher. And you have the Fed slowly easing here, doing the 25 basis points, 25, 25, 25. What you do want to watch out for and be careful of is when they start kicking in the emergency rate cuts, when they start kicking in bigger chunks of rate cuts, 50 basis points, 75 basis points, 100 basis points. And what you really want to be scared of is when they have a meeting, let's say their meeting is scheduled in 2 months from now, and they come out all of a sudden on the weekend and say, hey, we're decided that we're going to do this rate cut, emergency rate cut, because the economy needs it, and they do a 50 basis point rate cut or a 75 basis point rate cut, a big jumbo rate cut. That's when you want to start worrying and watching out that what's going on. Why are they worrying? Why are they panicking? Something happening in the banking system. Already there's also talks about issues in the banking system, right? Liquidity issues, potential use of the safety net when it comes to the banks out there that need more money. So many issues out there, right? We've also heard about the issues with commercial real estate in the past, right? That hasn't gone. We still have issues of that as well. So many things can still be in play, but for the next 2 months, I think it will be quite okay and fine until we get the new administration in January, and then we'll see how things play out with the Fed, and most importantly, the data, right? Let's not forget, last non-farm payrolls report came in very weak. The jobs report last time came in super weak. Now, I say that has to do with, the labor strikes that happened. Addition also to that was the hurricanes and so on. So if that's the trend, let's see how the next month or two and so on, how the labor reports come out for that. So it'll be interesting there. So anyways, those are my thoughts. Let's see how it plays out. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video. And I'll see you guys around. Cheers. Bye.